I'm Ashton Addison from EventChain for Investment Pitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Jack McDonald, the CEO of Standard Custody. Jack, welcome to the show. Thank you for taking the time to be here today.
Thanks for having me.
Yeah, I'm really excited to dive into Standard Custody, the institutional markets, and the custody of those funds, which has really grown throughout 2021. I'm really interested in your take on it. But first of all, I would love if you could give a high-level overview and the focus of Standard Custody.
That's great. Well, thanks again for the opportunity. Standard Custody is a digital asset custodian. We're focused on serving institutions to provide custody and escrow services for a broad range of digital assets. So not just cryptocurrencies, but other traditional assets that over time will be digitized or tokenized. We're unique in the space in that we're the only crypto custodian or digital asset custodian with a blockchain at our core. So we'll talk a little bit about that. We're regulated by the New York Department of Financial Services. So we join a very elite group of select firms who actually have that regulatory banner. And we also have insurance through Marsh and are really excited to be launching the product.
It is very exciting, Jack. And it's great to bridge that gap between the crypto and traditional markets. You know, it seems so far in the latter half of 2020 and throughout 2021, institutional custody has become very important, and there's a lot of institutional capital that's flowing into these digital asset markets. Can you talk a little bit about how Standard Custody is positioning the company to bridge that gap from traditional investors into the crypto markets?
Absolutely. And I think part of it, a large part of it is you can see exemplified through our recent partnership that we announced with Cowen. But before that, you also touched on the fact that, we've got both traditional and crypto and blockchain DNA in our organization. Our founder is Arthur Brito, who was one of the three co-founders of Ripple. We also have David Schwartz, who's the current CTO and chief cryptographer at Ripple, who is on our board and an investor and an advisor. So we feel like we've got real resident expertise in blockchain and cryptography. And on the traditional capital market side, that's where my background is. Our vice chairman used to be the vice chairman of BNY Mellon, Tim Keeney, responsible for all asset servicing. So we're really approaching this opportunity from both a digital asset, crypto, blockchain perspective, but also a firm understanding of how traditional capital markets work, because we have a view that there's going to evolve over time a real merging of these two different ecosystems. Mm-hmm. We preach evolution, not revolution, so it will take time. And we're starting to see some really meaningful examples of organizations, traditional organizations, who have an interest in the digital asset ecosystem and want to partner. Perfect example is Cowen, who just led our Series B round, which we announced a couple of weeks ago. We've closed a $60 million round. They were the lead investor in that. And it was really, I think, due in large part to them wanting to have a linchpin for Cowen's digital asset strategy that they're in the process of formulating, and had a firm belief that custody would really be at the core of that. They want to take their whole capital markets business and basically re-platform it to support digital assets. And so by leveraging our custody business, they can take their traditional trading, lending, margin financing, and prime brokerage businesses and really layer it on top of a regulated and insured digital asset custodian. So they're one example of a sell-side firm. I think they'll frankly be the first investment bank on Wall Street going to market with a holistic buy, hold, custody, and fully service that asset. They'll be the first on Wall Street doing that, which is really exciting. We also have a partnership with blockchain.com, another one of our investors who's looking to build out an asset management business. They're obviously, as the name implies, and I don't know how well you know them, but they've been around for a long time, one of the largest Bitcoin exchanges. Mm-hmm. They're looking to build out more of a traditional asset management business, leveraging digital assets, and we hope to partner with them. And then I would say, finally, we're seeing an enormous amount of interest from traditional hedge funds, family offices, and banks, frankly, who are looking to transform their current offering to get into digital assets, but wanting to do it through trusted partnerships and wanting to do it through regulated entities. And so coming from a background of traditional capital markets, partnering with folks like Cowen, we're finding that there is the ability to take interest in varying degrees that's been there, but to really accelerate the adoption by being able to do that with counterparties that they know and counterparties who understand their core business.
Definitely, Jack. Those are all great points. And having the round led by Cowen and having this traditional markets experience, I think, is a huge factor. And I'm curious, because there are quite a few institutional custody players in the markets now, especially with this increased demand, is the trust factor one of those major factors for traditional investors that or family offices that have a lot of capital and they're looking to choose an institutional custody market for digital assets? What are those factors that you see them prioritizing, and how are you prioritizing those into standard custody to ensure that you are the leading choice for those institutional investors?
I think you hit on a lot of the really key decision-making ingredients for institutions coming in, particularly as they're wading into a new space here. And trust, ironically, because in many cases what we're actually developing here is a trustless society, replacing trust with truth by leveraging our blockchain. But from a counterparty standpoint, trust is key, and we want to be a trusted counterparty to the institutions who are investing in the space. The way we do that, I think, is through the team we have, the leaders we have. We have deep relationships and history in traditional capital markets, so that's certainly helpful in terms of instilling trust. Having a brand that is regulated by the New York regulator, really the highest regulator in the land, on a state-by-state basis is very critical. Getting insurance through a brand name like Marsh, again, these are all institutional foundational building blocks that traditional capital markets use to gain comfort and to instill comfort with the board of asset managers or the investors. And so we want to replicate many of those today. When you dig a layer deeper in terms of our actual offering, having a blockchain at our core also, we think, really separates our offering from the balance of other competitors that are out there. As I mentioned earlier, we're the only digital asset custodian with a blockchain at our core. And what that allows us to do is to have an immutable record of every step of the transaction, keeping the identity of each participant at a firm who is either initiating or approving a transaction, right through to the ultimate transfer of the asset if it leaves our vault to go to an exchange to sell, for example, or move somewhere else. And so being able to provide that audit trail is another component of trust that is driving people, frankly, to our platform and getting comfort not only with the operational folks who are oftentimes making a key part of the decision at these asset managers, but also, very importantly, instilling confidence and trust from the leadership team and ultimately the investors.
I think that's a great point, Jack, and also instilling confidence and trust in the New York regulators. And you mentioned a couple times about how Standard Custody won one of the crypto licenses from the Department of Financial Services in New York, and I've heard that those licenses are pretty hard to get, and they're not just handed out like cookies. Can you talk about the importance of that?
Well, yeah, I wish they were. They would have saved me a lot of money and a lot of time. But we were deliberate. We wanted to be a qualified custodian for institutions rather. And in the U.S., the only way to become a qualified custodian is to either be a broker-dealer regulated by FINRA, and FINRA has not been giving out those licenses. You can be a futures, an FCM, which is regulated by the CFTC, Commodities Future Trading Commission, and they have only awarded licenses, as the name implies, for entities that want to trade futures. So if your business was just around Bitcoin futures or commodity futures, that's applicable. But for the sort of business that we're running, the only real alternative was to go on a state-by-state basis. And there's less than a handful of states that actually award charters for digital assets: South Dakota, Wyoming, Nevada. And we felt like New York, being the most stringent, certainly from a capital requirement standpoint, the most stringent from a onboarding and other sorts of policies, procedures, cyber, et cetera. We felt like the effort and the resources that we would have to dedicate and the time to get that license would ultimately work to our benefit as institutions kind of surveyed the opportunities and the options that exist in the landscape. And that's certainly been the reaction that we've been getting since launching the business.
That's great. And now with that fundraising closed through Cowen, the $60 million that you mentioned in the Series B, Can you talk about that being closed and the next steps that you're going to take in the markets as you continue to grow with that fundraising closed?
Sure. We're in serious growth mode right now, so hiring lots of engineers. We've been on a roll there. We're also building out the client success team and the sales team, adding people to our compliance efforts. So all of the requisite human capital that we need to really grow the business. We also think about non-US expansion. So part of the use of proceeds will be going to build out teams in Europe and Asia. And we also have some bigger ideas around settlement that would be cross-asset class and cross-chain, really to build an interoperable settlement layer that we are in some proof of concepts right now that will direct some of the funding that we've raised towards further building out those initiatives.
That's great to hear. And now, in terms of the actual product, you mentioned a bunch of strategic partnerships that you have, and I was reading on how you're really focused on enabling institutional investors to seamlessly access and leverage crypto in their portfolios. Can you talk about those steps and how easy you're actually making it for those investors to get their funds into the digital assets?
Sure. I mean, the standalone custody product itself is very easy to work with. We onboard clients. We go through a rigorous vetting policy and process around AML, KYC, et cetera, all that has been pre-approved by the DFS. Once clients are approved, and we bring them on board in terms of putting them through some of the training that's required to use our products, biometric videos being taken, et cetera. Once clients are onboarded, our product is quite easy to use in terms of transferring assets in and out of the wallet. We are in the process also of linking strategically to Cowen, who will be handling, at least in the early days, all of the trading and asset servicing, so lending, borrowing, et cetera. That would allow clients really a one-stop shop in terms of not only custodying and holding secure their assets, but to the extent that they want to buy, sell, borrow, lend their assets for yield. There will be certain protocols that we support that provide staking or other sort of DeFi opportunities, and we fully plan on being a full-service DeFi supportive participant from our custody and escrow operations. So it really depends, Ashton, about what type of product or service you're looking for, whether we would be doing that natively within standard custody or through partnerships with folks like like Cowen.
That's great to hear. And I was just going to ask you about staking, DeFi, and storing even these major assets like Bitcoin and Ethereum in cold storage. Now, with a lot of these products moving to proof of stake or having staking abilities for stablecoins or these major assets, that seems like something that would be pretty attractive to institutional investors that have a lot of capital.
It's very attractive. You want to fully service the assets that you have and take full advantage of them. And so staking is a perfect example of where you can get yield on the assets that you have. And so I think the attributes of what traditional cold storage can offer are quickly evolving with the whole advent of DeFi coming in, and also the technology that is used to support traditional cold storage is also changing. I think one of the benefits of entering the market now is that we've taken advantage of a lot of the technical innovations that have come into the market over the last 2 or 3 years. So relative to some of the custodians that have been around a little bit longer, we're quite confident and excited about the technology stack that we have. We firmly believe that it affords us a lot greater opportunity to be flexible in terms of supporting institutions and owners of assets of how they want to service those assets, the sort of integration points that we can do, all backed by a blockchain that can securely store each one of those different events, memorialize them on our chain, and also from a regulatory compliance standpoint, be able to offer a much greater platform to gain comfort and trust from all the different participants on both the buy and the sell side that we interact with.
Definitely. And you mentioned cold storage there a couple times, and I was reading with standard custody that they were touting that the funds are safer than cold storage. And I'm curious if you could elaborate on that.
None of the other custodians have a blockchain at the core, and by having a blockchain, we're able to run business logic that we've developed, as well as our own proprietary multi-party computing, or MPC, stored in the blockchain, but running that through our HSMs, or hardware security modules. So through that dynamic and that intersection between those different technologies, we're actually able to offer a more robust security shield. And again, as I mentioned earlier, being able to provide an immutable record of every step of every transaction that can never be altered, the identity secured for every participant in our custody and escrow product, we believe adds a whole different layer of security than exists with anyone else, all at the same time being able to provide a great deal of flexibility and ease of use, because the most secure platforms can exist, but what good are they if you can't access the asset? And so that's walking that fine line, which many in the industry are trying to develop around how you keep assets very secure, but also making them accessible. We feel like we cracked the code in a very innovative and demonstrable way there.
Definitely. And with integrating DeFi, staking, and looking for other future trends in the market and new ways to utilize their assets that are going to be on standard custody, I'm guessing that you're also just looking at the industry as a whole and what trends and what would be best to implement as new kind of products into the platform. Can you talk about the trends in the industry, what you see and what you're most excited about as the digital asset space just continues to grow throughout the next couple years?
Sure. I'd say there's three big trends that I'm excited about. I'm certainly excited about DeFi and all that represents. We very much are a mission-driven company, and we believe in the democratization of finance. And so DeFi very much dovetails into that thesis. I'm also incredibly excited and really feel very affirmed in our thesis around institutional adoption and how institutions will want to do business with trusted counterparties. And we're seeing that through some of the partnerships we have. A lot of people have been waiting for institutional adoption to increase. It's been a good last 12 months, I think, in terms of that, as different buy-side entities and corporates have come in and announced their investments specifically into Bitcoin. But the broader ecosystem, I think, has benefited from institutional adoption. But we have a slightly different take on it, and it's going to market through trusted partnerships in heavily regulated entities. We think is going to be a real differentiator. The third trend that is nascent, but it is happening quietly, is the broader digitization or tokenization of traditional assets. And we think that is just a massive greenfield opportunity that frankly is far greater than just the cryptocurrency or virtual currency market, where you can think about all of the inefficiencies that exist in capital markets globally. Think about assets, and we can start with some of the more illiquid or opaque asset classes like real estate and venture capital, private company shares, et cetera, and being able to help re-platform the financial system to really make that whole wealth transfer more efficient, we think is really, really exciting. We've got some interesting POCs going on right now in Europe with some large asset owners and asset servicing firms, and we expect to do more of those and really help pave the way for a better, more efficient, more cost-effective, and ultimately more secure capital markets business globally. And that's really, really exciting.
Very exciting, Jack. And tokenizing real estate and just the capital markets overall, compared to what the digital asset space is right now, it's just a speck of dust. We're still so early on. So getting in right now is, you're at the forefront of innovation still, even though we're a few years in, compared to the size of what this is potentially going to grow to in the coming years and decades. It's very exciting. So for the viewers that are looking to learn more about standard custody, potentially get involved, what is the best way for them to learn more?
Best way, we're rolling out a new website in the next week or so, but standardcustody.com, you can take a look there and just contact us through that website, and we'll happily get in touch with you, give you a demo of our product, and talk to you about how we can help you secure your assets and better service those assets going forward.
Sounds great, Jack. I will leave those links in the description box below as well. All the best moving forward with standard custody, and let's follow up in the near future.
Sounds great. Thanks for having me, Ashton.